Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
Welcome back to the HMO Property Show. I am your host Neil Gibbon, and today I'm here to tell you that the banks are the enemy and the money system is broken, and there's some big changes coming, guys, and we need to be across these because right now the banks are masquerading as our friends, pretending that they want to lend us money and they want to do good for us and help us and blah, 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 blah. But the banks care about one thing and one thing only, and that is profit, shareholder gains and shareholder profits. So I want to take you through the banking system, how I believe and understand that it works, and then I want to talk about something that's coming very soon and how it can change a lot of the things that we do. And then I'm going to tell you how you can try and play the banks at their own game. Because right now, global debt is higher than ever. The US Congress has increased the debt ceiling 78 times since 1960. That means they keep increasing the amount of debt that they will allow. And the whole idea of a debt ceiling is to stop the debt from spiraling out of control. Well, the problem that's going on is since COVID, there's been more and more money printed, which means there's more and more debt out there because they're creating money out of thin air, right? And the problem that we're seeing, especially in America, is 80%. Let me just find my notes on this. 80% of all US dollars in existence were printed from January 2020 to October 2021. That's $20 trillion. 80% of the cash in the system was printed in 18 months. And why is that happening? Because in 1971, President Richard Nixon stopped the direct convertibility of US dollars into gold. And with that decision, the international currency market lost its formal connection to gold. And this is when the global financial system entered into the era of fiat money. So paper money as we know it today. And this paper money held no value because the banks can print it at their own will. So the gold standard, as it was known, prevents inflation, as the banks and the governments are unable to manipulate the money supply by over-issuing money. And that's exactly what they're doing right now, right? They're just printing more and more money. Now, I know I mentioned America there. Australia hasn't been as bad, but we are a fraction of the size of the United States. And during COVID, we printed $429 billion during the pandemic. So that's why inflation is at 8.4%, or that's why it peaked at 8.4%. And that's why the RBA raised the cash rate. And that's why we're seeing a lot of people getting tapped out in borrowing capacity currently because they are cash rates high. We've been through this multiple times on this podcast. Cash rates high, it's harder to borrow money. The only way to increase your borrowing capacity is to increase your income, but it's getting harder to do that currently. And this is why real estate prices are through the roof as well, right? Because there's so much cash in the system right now that if you introduce more cash into the system, it means more people have money, which means it devalues the actual value of the money that we use, right? But because there's more in the system, it means we can pay more for things, which is why real estate's going up in value. Because people think they've got more money, but they don't actually have more money. So the money system in Australia works in the following way. The central bank, which is the Reserve Bank of Australia, they create debt to print and deposit money into commercial banks, which is quantitative easing, which is money printing, right? And they set the cash rate, but they do not provide the banking facilities to the general public. This is the Royal Bank of Australia, the Reserve Bank of Australia, sorry. They give the money to the commercial banks, Westpac, Commonwealth, etc., etc., etc. The commercial banks then loan out this debt money to consumers and businesses. So they've essentially created money out of nothing, giving it to the commercial banks. The banks then lend it out, and they make heaps of money. But the monies came from nowhere, right? And commercial banks are corporations that need to generate profits to satisfy shareholders. The profit-driven motive can sometimes lead to practices that are not in the best interest of customers or the broader economy. For instance, you could go into a bank and ask them, let them know that you want a mortgage, and they can just give you the best mortgage that they've got on the shelf that will suit them. And this is why the brokers are your friend and the banks are not. And I'm going to say it again, the banks are your enemy, essentially. They just want to get as much money off you as possible. And this is what's coming. There's some big changes coming that you need to be aware of. So the central banks the banks might increase fees. They offer riskier investment products or prioritize lending to large corporations over small businesses, all in the pursuit of high returns of shareholder profit priority. The banks then lend this money to consumers and businesses in the forms of mortgages, loans, credit cards, etc. But they have created the money from debt, literally money from nothing. But us as the consumers that need to borrow this money that they've just made out of thin air, we need to have good jobs, solid incomes, good asset base, low debt. And this is just to borrow their fake money off them, right? So bear with me. It's going to get a bit more interesting, guys. It's not all doom and gloom. There's a thing called fractional reserve banking as well. So fractional reserve banking is a banking system where banks only hold a fraction of their bank's deposit as reserves. This means that only a small portion of bank deposits are available in the bank's vault or the central bank for withdrawal at any given time. There was something on Facebook not too long ago that people were saying if everybody went to the ATM and took $20 out that day, the banks wouldn't have enough money to give everybody the cash that they actually needed. $20 per person. Incredible. But the reserves are meant to provide liquidity, ensuring banks have enough available cash to meet their immediate transactional needs and withdrawal requests from customers without holding on to all the deposited funds. Now, this system of fractional reserve banking allows banks to lend out most of the deposited money to other customers as loans or mortgages, and the money lent out is essentially created by the bank when it credits the borrower's account, increasing the total money supply in the economy. Just money out of thin air, right? Because they don't even have it in their banks themselves. Now, if a company doesn't have money, it doesn't have enough money to meet their debts, then they would be classed as trading insolvent. But a bank gets away with it somehow. Why is that? I don't have the answer. I've went down a lot of rabbit holes and I've ended up reading books on people controlling the world or organizations controlling the world. And man, it gets a bit dark when you start going as deep as I've been. So basically the banks can lend without actually having the money in the bank. Money is largely created through the process of lending. Banks issue new loans based on the deposits they hold, but this money is essentially created out of thin air through accounting entries. This has the effect of expanding the money supply, which is why we're seeing prices go up. Real estate was going up anyway. Every year we've seen it go up in Australia. Not every year, but historically trends upwards. At the minute we're seeing, loaves of bread and pints of milk and all that sort of stuff increase because inflation's been high. And I don't know whether I've just been blind to this, but I went shopping with Joe and Freddie a couple of weeks ago. And we got 2 bags of shopping and we spent $370 in Coles. I could not believe it. And I said to Joe, that's the first time I've actually witnessed this in full effect. Maybe because I never really go shopping much. Or maybe that I just never go shopping and buy at bulk shops. I normally just pop in on the way home from work and pick something up if I need to. I couldn't believe it. It was the first time I'd actually seen it. So lending without having, right, while necessary for economic growth, the system can also lead to inflation and asset bubbles as too much money chases too few goods or investments. Interesting, eh? So I've got heaps of notes here, guys. If it sounds like I'm reading, it's because I am, because I was just reading all this stuff and copying bits into my notepad and it's just, yeah. Right. At the minute, have you ever tried to take money out of a bank? Have you ever tried to move large sums of money around? Have you ever tried to find an actual bank that's open? Because all the branches close to me have all closed down. We used to have a NAB, a Westpac, a Commonwealth Bank and a Bank West, all within a very short distance of the office or my house. And they've all started closing down. Now, I've got 2 stories for you here. A couple of weeks ago, we were ready to settle on a property. I had some money in my personal account I needed to transfer that into my business account, and then from my business account we need to put that in the settlement agent's account so we could settle on a property. Because the amount that I wanted to transfer from my personal account was over $40,000, I was told by the lady on the phone that I needed to go into the bank to do the transfer. Now, I was absolutely blown away by this. Not only because I had to go into a bank to make the transfer, in a world that we are changing to digital currency and removing cash from the system, and I'll get to that very shortly, but I couldn't even find a branch close to me to do the actual transfer. So I got my app out and I said, right, NAB Bank, closest one's Victoria Park. So I jumped in the car, went to Victoria Park. There was 2 people in the branch. They were both serving customers. So I stood back and I waited for 15 minutes, answered some emails on my phone, etc., etc. Then the lady comes up to me after she finished dealing with a customer and she said, can I help, sir? I said, yes, I'd like to transfer some money from my bank account into my business bank account because we're looking to settle on a property. And she said, oh, sorry, sir, you can't do it in this branch. I was like, what? It just took me 20 minutes to get here, and now it's taking me 20 minutes to get to the next branch after I've just waited 20 minutes for you to do that to the customer. Now it's going to take me another 20 minutes to get to the other branch. Oh, man, it was disastrous. So I apologise to that lady for my rant. And if you are listening to this podcast, Mrs. From the lady from NAB, I am sorry again. My outburst was probably not warranted. However, Bank West is another bank that I used to deal with, and I got into cycling not too long ago, and I wanted to buy a bike from Facebook Marketplace. There's a bike for $3,500. So I went into the bank and I said, can I take $3,500 out the bank, please, Mr. Bank Teller? And the guy behind the counter said, what do you want the money for? And my response was, what's it got to do with you? It's $3,500. He goes, oh, well, we just need to ask, sir. And I said, well, I'm going to buy a bike. Is that okay? And he said, yeah, it is, but I can only give you $3,000. And I said, well, that's not good enough because the bike is $3,500. So I need $3,500. And he said, well, we can only give you $3,000 over the counter. What you can do is go to the ATM teller machine, which is like 10 footsteps to my right, and you can take the other $500 out of there. I said, that just doesn't make sense. Just not make sense. Apart from the fact I didn't have my bank card with me, so I couldn't take the money out the bank, out the ATM machine. So banks currently, I'm not enjoying dealing with them. They're getting harder and harder to deal with. And I read online the other day that Macquarie Bank have now announced that they're going cashless next month. Totally cashless. You cannot put money in or take money out from Macquarie Bank in June, moving on, June 2024. I think that is bonkers. Why is this happening? Why are they closing all the branches? Why are they making it difficult for you to get cash? And why are they making it difficult for you to move cash? And why are they actually stopping you from taking cash in or out of a bank? Because there's the thing going on in the background, and there's a shift to things called central bank digital currencies, or CBDC for short. Now, I thought this was a rumor. We've obviously got cryptocurrencies and stuff like that. The banks, again, have you ever tried to buy any cryptocurrency and move money from your bank into, I don't know, CoinJar, CoinSpot, Binance, any of them trading platforms? The banks literally stop you from doing it. They say it's for fraud purposes, and they don't want people to get scammed. But they know that once your money goes into a decentralized world of cryptocurrency, they can't track it, and they want to keep their money in their system. So there's this form of control that's going on, because once they've got you in their system with a CBDC, they can track every single move that you make. Let's think about this, right? If I know, and it's very rare that I do have cash on me. I've got a couple of $100 in my safe at home, not a great deal. But let's say I take $50 into a shop and I spend that in a shop, and then that shop owner takes that $50 and he goes to another shop and he spends that in another shop, and that $50 can potentially be passed around 1,000 times, 1,500 times, 2,000 times, who knows? And it will still be worth $50, and it will have only transacted for $50. Now with the CBDC, and I'm not sure if you've seen this with your normal debit cards and credit cards, is every single ATM, every single I forgot the names of them now. You tap your card on them. Card machine. Let's just call it a card machine. Every single card machine now, it used to be only Amex that charged you 1.5 to 2.25% on a transaction. Now, every single transaction you make with a card, you are getting charged another percentage point on top of that as well. So, $50 on a card machine now becomes, with a 1.5% surcharge on there, which is very, very common these days, that becomes $50.75. And where does that 75 cents go? To the bank. And if the bank are making billions of transactions per day, well, let's say even if they're making millions, that is a lot of profit that goes straight to their bottom line for their shareholders, because we are just willingly tapping our cards willy-nilly because they are removing cash from the system. Told you I was going to get into it, didn't I? So the banks are saying that the shift to central bank digital currencies will remove fraud, illegal trade and tax evasion. But I believe that it will give them even greater control over you as a consumer and you and your spending habits. And this will have impacts for you moving forward for loan applications, car finance, mortgages, etc., credit cards, all that type of stuff. So with a CBDC, imagine a world where every single transaction you make is tracked and potentially charged for. It's just bonkers, isn't it? Like, they'll be able to track and trace every single move that you make, and they'll use this against you with finance applications. The fraud and illegal trade will transfer to cybersecurity, and there'll be more cyber attacks than there will be people getting robbed on the street, because they can do it from their own computer, and there'll just be wizards sat there that will. There's always somebody out there that's smarter than you and can set up a way to fraudulate money from somebody doing a transaction. The banks are saying that's why they're stopping people from buying cryptocurrency, but at the end of the day, it's happening more and more. We've had money taken from our business account once, it was something like $7,000, and they were buying something weird like Kentucky Fried Chickens or something like that. We had to shut it down, stop the card. Luckily, the bank refunded all the money back to us. But it's happening. It's rife out there. Cybersecurity is getting worse and worse and worse. People are getting scammed. Is getting worse and worse and worse. Massive control issues. So they're going to stop you spending, or they can stop you spending at a click of a button. So you do something that will upset the bank, like record a podcast saying the banks are your enemy, and they could potentially just click a button. Sorry, Mr. Gibb, we don't want you to bank with us anymore. Good luck finding somewhere else to bank, because we're all in bed with each other and we all look after each other. But what's happening in the UK, right, is there's a thing happening called debanking. And debanking is, I don't know if you follow the likes of Andrew Tate or something like that. He talks about the matrix that we're in at the minute. Andrew Tate has bank accounts cancelled on him constantly at the minute. And in the UK, the banks are closing down bank accounts for what they call politically exposed people. And this is somebody that holds or has held public office and is therefore more susceptible to bribery or corruption. So they're saying if you are a politically exposed person, you are more susceptible to bribery or corruption. Therefore, we are going to shut down your bank account. And if you don't believe me, Google a guy called Nigel Farage, and he's talking about the fact that this NatWest, or National Westminster Bank of England, shut down his bank account after he banked with them for 35 years because he was classed as a PEP. So the banks right now are making some big moves, guys. So how can we play the banks at their own games? How can we beat the banking system? Well, for me, I think we've got a window of opportunity where we can try to access as much finance as possible. Or, no, don't go out there getting loads of credit cards, guys. When I'm talking about finance, I'm talking about mortgages. So try and get and control as much property as possible. Try and pay down that debt as fast as possible and remove yourself from that system. Now, you still might have, obviously, rent being paid digitally and stuff like that, but you need an asset base that is not controlled by the banks. You need an asset base that produces money so that you're not in their system. And this is where we are moving to now, guys. We need to really, really be careful moving forward. No, not everybody's recording podcasts saying that the banks are the enemy, right? But at the end of the day, the shift to the CBDC will mean that they can do all of them things that I've mentioned there, track and trace every single move. There'll be more fraud in the way of cybersecurity. There'll be control issues, debanking, etc., etc. So yeah, there you go, guys. Bit of a curly one for you. I'm not very... it's not very often that I come out with all of this type of stuff, but reading up on it and having that conversation where I just randomly said, oh, the banks are our enemy, the brokers are your friend, it led me down these rabbit holes, and I wanted to share with you the findings that I've got. I hope it helped. Hope it didn't scare you too much. If you got any feedback, if you got any questions, feel free to send me a message. I'd love to hear from you. And yeah, remember, every master was once a disaster, and every winner was once a beginner.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.